Hey traders and investors, it's Friday, October 10th in the evening. Markets just closed. If you didn't watch this morning's video, which really the market unfolded play by play, really the whole week, everything we've been talking about from gold hitting our target and silver, like more or less hitting a resistance level and reversing down, silver having somewhat of a reversal bar. When you look at SLV, it gapped higher, showed some volatility. Today, we had the bad news of tariffs hit the market. We saw the NASDAQ fall 3.5%. We're pretty much in the Magnificent Seven have broken down, which we talked about yesterday in our live mentoring session, how this was setting up that, and I talked about how there's the perfect storm brewing, how the Mag Sevens could destroy the stock market once the selling starts there. Anyways, everything is really unfolding kind of play by play, slow and steady here. When we look at the QQQ, we've got the markets are oversold. They pushed into an oversold territory, which we've seen happen several times in the past. If we go back, you can see the other times it gets oversold. We are still in an uptrend, but a lot of damage was done today. Big volume, huge, what looks to be a reversal bar to the downside. And yesterday when I shared in the afternoon update how funky things were, or actually I think it was this morning, how we saw panic selling on on Thursday. We saw panic selling on Thursday yesterday, yet the stock market was going higher, and how our indicators, when we look over at our sentiment of the charts, how we have this unique scenario, and I know I'm going pretty quick, but we have this unique scenario where big money is moving out of the market, yet the stock market was hitting all-time highs. Here we have big money moving out of the market, yet the stock market is pushing to all-time highs. And yesterday, the stock market went up in the last 2.5 hours, even though panic selling, huge selling. I say panic selling, but it wasn't really panic selling. It feels more like insiders were dumping shares yesterday. The stock market was held up by the Magnificent Seven, and it looks like the majority of insiders or whoever was unloading a ton of shares yesterday before the close, probably anticipation of today's news. And that's what we're seeing that. And gold's been telling all this, that we've got this craziness in the market. Anyway, when we look at what's going on today, we've got a strong bout of selling on the charts. Quite a bit of damage on the short-term trends have been hit. This is not the type of candle we really want to see, which is a close at the lows on a Friday with big volume and news, because unfortunately, the whole world is emotional, which means half the people who are working normal jobs are going to come home and take a look at this, and they're going to panic, and they're going to put in their orders to sell on Monday. Then they have the whole weekend to ruminate and talk about it and scare each other, all their friends who are in this all together, and it's going to probably create a bit of a gap down on Monday. And then that gap down could be like a flush out and a shakeout in the market. That's exactly what we saw. This type of scenario is exactly what happened right over here. We had the big sell-off on tariffs. It closed at the lows on a Friday. The market gap sharply lower on Monday, flushed down. We talked about how this was going to be like a signature type of bottom, and then boom, we've had one of the biggest rallies we've seen in the markets. And so that's kind of what is preparing for Monday session here. So anyways, lots of excitement, and the panic selling is up at 6. Typically, if it closes at 7 or higher, we're usually at a significant pivot low in the market where the market can rebound with a vengeance and continue to go higher. But the fact that the way this is closed, we're probably going to see some more weakness on Monday and see a lot of fear. We'll probably see this indicator spike up in a very big way, at least in the morning. Will everybody dump shares and screams the sky is falling? Now, obviously, this is a pretty big move. When we look at previous moves like this, there's a 4% move. Here is a 4% move, and where we are from the high and the low, we're about a 4% move. So this isn't like the end of the world. Of course, the way that people are reacting today and the volume is telling us people are panicking. It's an emotional move, and that's fine. That's just the way it is. We just need to see how things are going to reverse. I do think we are very close to a trend reversal. Depending on how things unfold on Monday, we might have our strategy kick us out and say, hey, this trend is actually reversed. But as of right now, it still hasn't reversed. This is still a one-day move down. It's oversold. We're still in an uptrend. And a one-day move on news doesn't change a trend. It takes more than that to happen. So Even if the news has changed the trend, it doesn't matter. We don't trade based on news. We let the price action actually confirm all of that before we take action. So money today was definitely flowing into safety havens. We saw bonds have a big pop and rally, huge volume. Everybody's just thinking, get the heck out of equities, move into bonds. They're getting tired of, I think, the tariff stuff and people dumping shares. We have gold moving higher, up over 1.4%. We had silver up 1% today. I guess they're recovering from the volatility of the last couple of days. And so they're still clearly the leader. There was a big bout of selling in the metal space the previous session yesterday, and it's finding that safe haven today. Interestingly enough, the stock market was down over 2% earlier today, and the utilities actually rallied. So in the stock market, if we look at this 10-minute chart, the stock market had sold off and the NASDAQ had like continued way down. Yet utilities, once people started to exit out of the stock market more or less, or rotate, then they moved into utilities, and utilities they've got pulled down temporarily, but then people moved into them. And it was clearly showing a sign of leadership. And anyways, it feels like everything is, the market and the trend feels like it's starting to break. But again, we don't want to get too worked up over a one-day move on news just yet. Let the markets do their thing, and we'll see how that shakes out over the next few days. Now, we do have the dollar pulling back, obviously. We've got, let me pull up the dollar futures here. The dollar index pulling back on that news. Again, it pretty much has hit its measured move, its Fibonacci measured move. It came right up into resistance. So a pullback here is kind of normal. We also know the stock market was overextended and very fragile. We talked about, I think, in the mentoring session or the previous video, it's like being in a plane and you're about to stall. You're running out of power, momentum, and the plane starts to shudder. That's how the stock market was with this right here. When we zoom in on our sentiment chart that tells us what the big money players are doing, the market was starting to shudder. That's what orange bars are indicating. And then boom, we go for a nosedive, a big red bar. So none of this should be of a surprise. If you follow my videos, then we knew something big was brewing and there was going to be some type of reset. The question is this just a one-day quick reset and the trend recoups, or is it going to drag out and be something much more significant? Anyway, the selling today definitely did some damage to oil, which was of no surprise. We have this bear flag. We're pointing to $56, $57 a barrel. To the downside, it's starting to pick up speed. And of course, that is going to, oil definitely hit very hard simply because, hey, if China's going to have higher tariffs, there's going to be less shipping, less fuel consumption, less demand, and that means oil's going down. So people were dumping oil. And if we look at retail, obviously a lot of sectors were hit really hard. Technology, obviously, but retail hit. Most stuff comes from China. It's crazy. So obviously that is going to hurt the retail space. And the biggest move really is technology. If we look at XLK, hit the hardest, massive volume. And the Magnificent Seven clearly show how the stock market, we had this divergence. The stock market just kept moving higher, yet the Magnificent Seven just traded sideways and refused to budge, and then it had a crack to the downside. So definitely lots of interesting price action, and all the mags were down sharply. So if we take a look at the hot list, the only safe places today were really consumer staples, and you could say utilities. They held up fairly darn well. So consumer staples, carbon, gold and uranium and physical gold and silver, really those are the only safe havens. And that's what we know is kind of those, well, gold, silver, and miners are kind of those, the safe haven play. TLT, bonds also moving up. As we go down the list, you can see how it just picks up speed to the downside. The ARC ETFs all hit very hard to the downside because they're tech heavy. Other than that, I mean, it was an exciting day. It's not fun to see things reset, but we also need one of these. If the market trend is going to stay higher, it does need to shake people out, and this is definitely shaking people up on news. The big question is, can it stabilize and hold its trend and recover, or is this the start of something bigger? And we'll find out next week. And of course, our positions and our stops, we're in the money with everything. We're set. It doesn't matter what the market does. We just don't make as much if it rolls over and we get a trend signal. Ideally, we hope it shakes things out on Monday, closes the day strong, and hopefully we can just continue to see this trend recover. And maybe the trend ends in a few days, a few more trading sessions at a higher price. That's very possible. We don't need our stops to get hit. We just need the upward momentum to stall out. And that's based on a bunch of things: price, cycles, and sentiment. So we look at the market from 3 dimensions, and that allows us to get a really good feel of what is going on. This morning in the video, I talked about Bitcoin, how it was setting up what looked to be a nice tight bull flag, how I didn't like it for a trade, but it was holding up nice and tight. I mentioned if the Mag 7s break down, which means the NASDAQ will break down, have a pullback, it's going to pull Bitcoin with it. And so now this bull flag pattern that was looking good is now gone. So any dreams they had right there today is over, and there's some damage being done. And now it requires more volatility, and it becomes a much actually a higher risk trade to try and catch it for a move up into this 136. So yeah, I wouldn't get too excited. You can see here on our 30-minute chart, it is dipping into oversold territory, but I'm just not a fan of how the markets are reacting here. Everything's getting stretched, and we'll see how things stabilize. Now let's just step back and take a 35,000-foot view of the markets. This is the weekly chart of the S&P 500. This is our TTI strategy, the technical investor strategy here. You can see the pullback today, this green bar on the weekly chart. We closed down. When you look at price action, going back all of these bars, if you look at this week's sell-off and even just today's bar, this pullback is nothing. In the grand scheme of things, in a bull market, it has much bigger pullbacks. So if you're zoomed in, which most people get too zoomed in on these intraday charts, they're like, oh my God, the sky is falling. Everything has changed. Get ready. But when you look at the weekly chart, like this is actually a very small pullback. Within bull markets, we have, as we talked about yesterday in our mentoring session, 8% pullbacks constantly. We have all kinds of pullbacks that naturally come through the market of 6, 8, 10%. We've got some over here that are even bigger, another 10%. So, don't get too zoomed in on this tiny little 3% and change pullback. This is the problem with following the news too much, listening to the media, reading people's opinions that are headline driven and emotion driven. It'll cause you to freak out over what looks to be like a pretty small pullback within a bull market trend still. So that's what we need to be aware of. Anyways, that's it for now. Hopefully everybody has a great weekend. Good Thanksgiving to fellow Canadians, and thank you for all the wishes for Thanksgiving as well for myself and my family, and we'll talk to you guys soon. Bye-bye.